Tomorrow we have CPI news, which will take the markets by storm and likely cause some high levels of volatility on things like the US dollar, the gold chart, the S&P 500, and pretty much everything else. In this video, we're going to go over all of that, and starting with this news article thing that I saw here this morning, bond yields. Now, we don't talk about bond yields often, but it's something we should pay attention to. Check this out. Government bond yields around the world extended declines on Monday as investors paired bets on higher interest rates and looked for safety after the collapse of Silicon Valley Bank. The benchmark, which I'm sure a lot of you guys have heard about, the benchmark US 10-year Treasury yield fell to a 5-week low of 3.5%, and the 2-year lost nearly 50 basis points to 4.05%, the largest 3-day slump since 1987. In Europe, the German 10-year government yield fell nearly 30 basis points to 2.17, and the UK was down to 3.27. So a big decline in the bonds market. Let's have a look at that. So here it is, guys, the US 2-year bond treasury yield. And you can see the yield has dropped from that 5% mark all the way down to where we currently sit at the time of recording this, around 4%. It's an absolutely crazy drop to watch that happen. And now this is a flight into bonds right now, as people are fearful about money and the markets, and S&P 500 is just absolutely tanking. Here's the S&P 500, by the way. We saw a really big steep decline, and might actually be a market to pay attention to going into tomorrow. Now, of course, we'll do gold, and we'll look at the dollar, and we'll look at all the good stuff that we usually do, but bear with me here. You'll notice that we had this upward trend going on for the S&P 500, and it fell apart right here. The S&P 500 broke support and has since turned the same levels that were sort of bullish strongholds, if you will, into sell zones. You can see price has dramatically sold off, and even intraday, you can actually see, if we zoom in here on the 4-hour, you can see we had several retests of areas of what was support now confirmed as resistance. So to me, the indices look bearish for now, though I won't be shorting them personally. They still look very, very tired and under a lot of pressure here as we get going into the New York session at the time of filming this. Now, that's not the only market that's on fire. Take a look at gold. Gold absolutely flying, hitting 1910. That is a crazy run, considering it went from 1810 in just a few days. I mean, this is an incredible rally for gold. One of the strongest rallies in gold I've seen in quite some time. In fact, if we scroll out, you can see we have not seen this sort of quick-paced rally since back in November of 2022. And in that case, if we take a measured move of, so for example, if we just take this move here, let me move my camera. So this move to this move, that was a rally of 1617 all the way up into 1787. If we were to take that same distance and see, if gold was to do something similar, it would bring us all the way back up to the previous highs around 1960 here, and perhaps even beyond it. Now, of course, this is not an all-time high. The all-time high was put back in all of the chaos in 2022. We tagged 2072, which was a crazy run up for gold. So, if you're looking at gold here, the reason I'm showing you that is that a lot of times when traders see this sort of move for gold, the first response is to say, hey, this thing is too high, it's got to come down now. And it's a really dangerous move because, again, gold has this inherent way of doing stuff where sometimes when gold gets going, man, it gets going and it does not stop going. So to try and call a top on gold is an incredibly difficult thing to do. And in my opinion, probably one of the hardest markets to do that on. Tops and bottoms on gold are meant to be broken, it almost seems like. So when looking at this chart, my thought process is I think we probably see price make its way up to levels like 1960 in the coming weeks or months. Now, of course, we may see pullbacks in between, and that is, in my opinion, if you were to be long gold, would have to be on some sort of pullback to levels of support that we have broken through, right? So a retest would be required for me before taking any sort of long side action, as I won't be buying a chart that has already made a substantial move. I'll be waiting for some sort of pullback prior to making that sort of call. Now, of course, I want to show you guys some more markets here. So if you're looking at gold, like I said, the summarized version is, if you're bullish, I would say wait for a pullback. Am I bullish? Not necessarily. I think that there are other trades out there that I like a little bit better right now. Despite that, the gold market is coming up on the watch list as a buy now. So if gold was to come into play, again, then maybe I'm looking to get long. But it would have to be on a retest. So that's where I'm at with it. 61.8%, 50%, somewhere in between there. That would be a possible bull signal for me. Currently, though, not something that is setting up for me according to the way that I trade. Now, I want to show you guys some of the dollar crosses. Again, I mentioned that tomorrow we have CPI numbers, which will likely cause some heavy volatility on the US dollar. And I've been mentioning this one level. I put this out on my Twitter. In fact, if you don't follow me on Twitter, make sure to do so. It's Trader Nick FX on Twitter if you'd like to check me out there. But I put out a tweet this morning talking a little bit about this US dollar pullback zone. This is the 38.2% retracement. And with all of this gold bullishness and the dollar just tanking, it's a serious concern for the dollar bulls here. If price is able to break and close underneath these lows, I'll probably abandon my dollar bullish thesis for the time being until we get CPI numbers. And again, CPI numbers are a big deal. If we get, CPI hotter than expected, it will likely cause the dollar to spike back up, right? So if we get CPI comes out tomorrow and inflation numbers are very red hot, it is likely that the Federal Reserve will probably raise by 50 basis points, which could cause some serious dollar bullishness to resume or to pick up its pace. Now, of course, if CPI comes out less than expected or cooler than expected, the S&P 500 might have a bit of a relief. The gold market may continue to soar, etc. Now, again, that is where we're currently at from a technical perspective. We are hitting a support zone and we are testing the limits of it. So we'll watch to see how that plays out. And of course, Euro USD, one of my picks currently, I am short on this one. Now we'll see. Again, if price breaks through the highs, I'll be out of this trade. So I have a stop loss above this zone. My current idea is shorting this area. If it doesn't hold, like I said, take a small stop and just move on. If it rallies, if it falls apart here and heads back to the lows, that'll be a great little trade for me there to see if I can catch that rollover effect. Now, again, currently one of the trades that I am personally watching is the Euro USD. Another one that kind of did me dirty was dollar yen. Dollar yen, I was long up in this area and I tried again here. Both of those trades turned out to be losses for me, and it sucks, but it's part of the process when it comes to trading. Is sometimes you just experience losing streaks, right? Losses seem to want to come sometimes in baskets, whereas so do wins. So when you're winning, it's great, but this is the part of trading that is difficult for everybody is, losing streaks. So if I bought here and it didn't work out and I bought again, it didn't work out, I still saved myself the trouble of taking the full blow of trying to, no stop loss, hold this thing long and getting crushed, right? So I'm not doing that. I'm managing my stop losses. I'm getting stopped out and looking for another opportunity to get long the dollar, but only if now with dollar yen, if we see some sort of higher lows, higher highs forming, that would be sort of required prior to me getting involved with this. Now, let me show you guys some more data here on the Edge Finder. Again, we continue to be monitoring what big money is doing, which is what we use the software for. By the way, if you guys want access to the Edge Finder, stay tuned. I'll tell you how you can get access in just a moment to try it out free. So give me 1 second. Let me get to my point here. So the dollar still 65% long here. The yen still very, very short by institutional money. Now this is the latest data that we have that came in. So we'll keep an eye on this one as we do each week, paying attention to smart money. Now, again, you can pause the video if you'd like to take a look at each asset that you're paying attention to. If you trade oil or gold, you can see gold very heavily bought by institutional money. Very interesting stuff there. In fact, they were long before the rally. And so this is part of the reason why we keep this data on the Edge Finder. It could be very useful, and it's one of the most popular pages for users who have purchased our softwares. They pay very heavy attention to the smart money tracker COT report data. Now, of course, retail sentiment, let's have a quick look here and see what's going on lately. So one thing that's really concerning about the gold chart for the sellers, look at this. The retail crowd loves the idea of shorting gold. Despite the gold market rallying so tremendously, again, retail is piled into a short trade. They're going against the flow of traffic. And so that's a red flag for bears, and in fact, a green flag even, in my opinion, for the bulls. I think that points towards, hey, the retail crowd is really short on this thing. Let's look to be more on the long side ourselves. Now, again, you can pause the video if you'd like to take a look at this data yourself. You have dollar yen on here, Aussie dollar, oil, etc. which might be useful to you guys as well. Now, a quick look. So this is some of our recent stuff that we've been doing with the Edge Finder. GDP data, 2.7%. The US is still in the lead there. And then a lot of 0% growth, a lot of very slow growth, if nothing at all, for a lot of other economies. We've actually also done the inflation data here as well. So you can see like highest levels of inflation. So Europe and the UK have some of the highest levels of inflation, despite Turkey being, you know, the absolute highest. But we're looking here mostly at the major economies first. So pound and euro, Aussie, these places have very high levels of inflation. Of course, the whole world does, but the US is sort of better off in that way. So kind of a point towards the US dollar still. Unemployment numbers, of course, we came out recently with more data there, and you can see 3.6% for the US, whereas we have Europe with 6.7, and the poor souls here dealing with these high levels of inflation. This is really tough on economies. And if you've ever lived in a world where high levels of unemployment have existed, it's a tough place. I mean, that's a really hard thing for the people of an economy to endure. So of course, no fun there, and hopefully unemployment does not get any worse for a lot of these places. We also just added interest rate data here, which is very cool. So you can pause the video if you'd like to take a look at that. Interest rates here expected to rise in the US, leading other places, for example, like Canada, GBP, Aussie, Europe, right? And expected again to rate hike yet again soon, which could put the dollar even higher than NZD, whereas NZD currently offering the same interest rates. These are some fundamentals for you guys. I hope that was helpful to you. Just something to keep in your toolbox. If you guys like this data, if you want access to it, remember, I told you can get access by going to our website. I've been talking about this on our live streams and stuff. If you head over to a1trading.com and you, in the bottom right hand box, there's a little chat box here. If you click this box and type the words free trial, so if you just come in here and type free trial, one of our staff will set you up with a copy of the Edge Finder Pro so that you can check out some of our data for yourself and see if it would be something that would be helpful to you in your trading. So check that out. Make sure to take advantage of that free trial offer. Thank you guys for watching today's video, and hopefully you're more prepared for your inflation news coming out tomorrow. Thanks for watching. Before you go, make sure to check out our free Discord channel linked down below in the description. And if you want to try out some of our products, our software tools here at A1 Trading, we have free versions available also down below in the description. Check them out for yourself down below. Also, if you enjoy our content here, we work really hard behind the scenes to bring this content to you each and every day. And if you enjoy our content, it would mean a lot to us if you hit the thumbs up button before you head out. Thanks for watching.